Did AT&T's 6.3% dividend yield just become more risky? I'm going to answer that question in this video looking at AT&T's latest earnings results which came out today, April 20th. So let's begin. Starting with AT&T's revenue, which increased by 1.4% in the first quarter to 30.1 billion. Earnings per share fell to 57 cents compared to 65 cents in the same quarter the prior year. On the positive side, the company added 424,000 postpaid subscribers. That's the 11th straight quarter with 400,000 plus additions. That's really good news for AT&T and AT&T dividend stock investors. Domestic wireless revenue was up by 5.2% compared to the same quarter the year before. And this is one I was surprised with pleasantly. Postpaid ARPU, which stands for average revenue per user, increased by 2% year over year. Why did that surprise me? Well, because rivals like T-Mobile and smaller wireless providers have been trying to undercut AT&T and T and Verizon to attract customers offering lower rates. And I thought that AT&T was going to feel pressure to lower their prices to maintain retain customers. That wasn't the case. They were able to add over 400,000 subscribers while actually having postpaid average revenue per user increase. That's really good news. That's a good sign to AT&T and Verizon investors that T-Mobile, with their lower prices, is not creating big downside to AT&T and Verizon just yet. Now, I say just yet because this could still happen in the future. Although, cell phone wireless data companies are a little bit different in terms of the market dynamics because of availability. You may not have T-Mobile available in your area, so or it might be available, but the connection might not be so good. So you might go with AT&T or Verizon because the connection is better. So with these wireless service companies, the connection and connection strength is also an important consideration and not just price. And price almost becomes irrelevant, right? Even if T-Mobile is, charging you just $25 per month, but AT&T is charging you $40 per month, you're not going to switch to T-Mobile if their service in your area is not strong, is not good. You're not going to want to be dropping calls. You're not going to want to have gaps in your coverage to save $15 a month because wireless connection is so vital to everything that we do, right? We're using our phones so often nowadays. We're using it for navigation, we're using it for phone calls, we're using it to check emails. So it's become an ever increasing part of our lives. So we may not be willing to switch to a lower cost provider unless they have equal coverage strength in our area. So that's something I think that's showing up in AT&T's results here, in the strength that it's showing in terms of customer growth and average revenue per user growth. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The company's on track to complete the $6 billion in annual cost savings by the end of year 2023. Already, the company increased its operating income by 500 million. It reported 6 billion in operating income for the quarter. That's good news as well. Total debt remains a concern. AT&T has $137.5 billion in debt. That's a lot of debt. Uh, I know AT&T generates a lot of free cash flow and cash flow from operations in order to service that debt for now. I say for now because if there is some headwind, if there is competitive pressure that brings down its revenue and profitability and customer growth, then this debt could become even more risky because it constrains what AT&T is able to do because it's got to allocate a significant portion of its earnings to debt repayment. Thankfully, it generated $1 billion in free cash flow in the quarter. And after these cost cuts are completed, that should allow for continued increases in operating income and free cash flow. So as of this recording, AT&T offered investors a dividend yield of 6.3%. And I would not say that the dividend is at a greater risk after these earnings results. Um, the dividend yield did already come with a meaningful amount of risk because of the debt on the balance sheet, mostly. And so in this quarter, that riskiness did not increase or decrease. So if I had to, say, I would say it was neutral, but closer to decreasing because of the postpaid net subscriber additions and the increase in average revenue per user. That showed me that the competitive pressure from T-Mobile is not as strong as I was expecting it to be. I was expecting AT&T's results to be more significantly impacted negatively from the pressure that T-Mobile is putting on the industry. But for now, thankfully for AT&T dividend investors, that hasn't been the case yet. That hasn't been the case yet. All right, so that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership, and I hope I'll see you again soon.